Have you ever wondered why FGD should be in your portfolio? Perhaps you've heard the term floating around, or maybe you've stumbled across it in your investment research. FGD, or First Trust Dow Jones Global Select Dividend Index Fund, is an exchange-traded fund that aims to replicate the performance of a specific index. Now, why should you care? Well, this video is all about shedding light on the benefits of adding FGD to your investment portfolio. We're going to delve into the key reasons why FGD makes for a compelling addition. From diversification benefits to high-yield potential and access to global markets, FGD offers several attractive features that could enhance your investment strategy. But we're not here to merely tell you about it. We're here to show you, to explain, to convince. With FGD, you can diversify your portfolio and potentially increase your returns. But don't just take our word for it. Let's dive into the reasons why. The first reason to consider FGD is diversification. Now, if you've been around the investing block a time or two, you know that diversification is the name of the game. It's like that old saying, don't put all your eggs in one basket. And this is where FGD really shines. Imagine your investment portfolio as a pie. If you slice that pie into just one or two pieces, that's a lot of weight on each piece, right? But if you cut it into many pieces, each slice carries less weight. That's essentially what diversification does for your portfolio. It spreads the risk around, minimizing the impact if one slice or investment doesn't perform as expected. Now here's where FGD comes into play. FGD isn't just one investment, it's an ETF, or exchange-traded fund made up of many different investments. It's like a pre-sliced pie. And not just that, these slices come from various sectors and regions, giving you a taste of the global market. This means that even if one sector or region is underperforming, others may be thriving, providing a balance in your portfolio. This type of diversification can be difficult to achieve on your own. But with FGD, you get a diverse spread of investments in one neat package. It's like having your pie and eating it too. So with FGD, you can spread your risk and increase your potential for returns. The second reason to add FGD to your portfolio is its high-yield potential. FGD, or First Trust Dow Jones Global Select Dividend Index Fund, is known for its impressive yield potential. This is driven by its strategic focus on companies that consistently pay high dividends. Let's take a walk down memory lane. Back in 2017, FGD boasted an annual yield of over 4%. Fast forward to 2023, FGD had an even higher yield of over 5%. That's a significant increase in just 6 years. But what's the secret behind this high yield? FGD's portfolio is composed of 100 companies worldwide that rank among the top in terms of dividend yield. This means they're serious about sharing their profits with investors. With its focus on high dividend companies, FGD can bring a steady stream of income to your portfolio. This can be particularly beneficial during market downturns when other investments might be underperforming. FGD can provide a good source of income, making it a valuable addition to your portfolio. The third reason to consider FGD is its access to global markets. Now, let's dive into what that actually means. When you invest in FGD, you're not just putting your money into a single country or region. Instead, you're spreading it across different markets around the globe. Think of it like a buffet of investment opportunities where you get to sample a little bit of everything. By investing in FGD, you're gaining exposure to different economies, industries, and companies that you might not have access to otherwise. This can be particularly beneficial if you're looking to diversify your portfolio or if you're interested in sectors that are booming in other parts of the world. Imagine being able to invest in a rising tech company in Asia, a hot new consumer brand in Europe, and a promising energy firm in the Americas, all without having to navigate the complexities of international investing on your own. With FGD, you can invest in markets around the world with ease. The fourth reason to add FGD to your portfolio is its long-term growth potential. Growth, after all, is a fundamental part of investing, and FGD offers a compelling case in this regard. Over its existence, FGD has demonstrated a steady upward trajectory. Historical data paints a picture of consistent returns even in the face of economic turbulence. But it's not just about the past. FGD's future projections are equally promising. The ETF is strategically positioned to capitalize on emerging trends and sectors, with a focus on areas like technology, healthcare, and sustainable energy. These are sectors that are not just thriving today, but are primed for significant expansion in the years to come. Of course, all investments come with risks, and past performance is not an absolute guarantee of future results. But with its track record and strategic focus, FGD presents an opportunity for investors seeking long-term growth. FGD offers a potential for long-term growth that can benefit any portfolio. The fifth reason to consider FGD is its tax efficiency. Now, what does this mean? Well, FGD is structured in such a way that it can bring significant tax advantages to investors. It's all about how the fund handles capital gains. In a traditional mutual fund, for instance, any buying and selling of securities within the fund can generate capital gains, which are then passed on to investors at the end of the year as a tax liability. But with FGD, the structure is different. It uses a method called in-kind creation and redemption to minimize these capital gains. This process involves swapping securities for shares of the ETF rather than selling securities for cash. By doing this, FGD can limit the taxable capital gains that are distributed to investors. So, in a nutshell, with FGD, you're not just investing in a potentially profitable fund, but you're also investing in a tax-smart way. With FGD, you can potentially save on taxes, making your investment even more profitable. The sixth reason to add FGD to your portfolio is its professional management. Now, what does this mean? Well, FGD isn't just a random collection of stocks and bonds, it's a meticulously curated investment vehicle managed by a team of seasoned professionals. These experts live and breathe market analysis. They have extensive knowledge of global markets and they work tirelessly to make informed decisions that aim to maximize returns and minimize risk. Imagine having a personal trainer for your investments, someone who understands the intricacies of the financial world, and who can guide your money towards the best possible outcomes. That's what you get with FGD. These professionals analyze industry trends, economic indicators, and company performance to make strategic decisions that align with the fund's objectives. So instead of you having to spend countless hours researching and analyzing market trends, you can rest easy, knowing that your investment is in the hands of experts. With FGD, you have a team of professionals managing your investment. The final reason to consider FGD is its liquidity. In the financial world, liquidity defines the ability to quickly convert an asset into cash without significantly impacting its price. And when it comes to FGD, like other exchange-traded funds, it's all about ease and flexibility. You see, it can be bought and sold throughout the trading day, similar to individual stocks. This is a stark contrast to traditional mutual funds, which only transact at the end of the trading day. But why does this matter, you might ask? Well, this feature of ETFs provides a level of liquidity that is highly valuable to investors. It means you can react swiftly to market changes, making investment decisions in real time. And the best part? With FGD, this liquidity doesn't compromise the benefits of diversification or yield potential. Thus, with FGD, you can easily buy and sell shares, providing flexibility in your investment. So, there you have it. 7 compelling reasons to add FGD to your portfolio. Let's take a moment to recap. We've discussed how FGD offers diversification, allowing you to spread your risk across a range of sectors and geographic regions. We've delved into the high yield potential that FGD can bring to your portfolio, potentially providing a steady stream of income. We've also explored how FGD offers access to global markets, giving you exposure to a range of economies and industries around the world. This not only broadens your investment horizon, but also allows you to tap into emerging markets. We've highlighted the long-term growth potential of FGD, making it an ideal choice for investors looking to build wealth over time. We've talked about the tax efficiency that comes with investing in FGD, potentially saving you a substantial amount in tax payments. We've emphasized the benefits of professional management that FGD offers, freeing you from the hassles of individual stock selection and portfolio management. And finally, we've underscored the liquidity of FGD, ensuring that you can buy or sell your shares at any time during market hours. These 7 reasons make a compelling case for adding FGD to your investment portfolio. It's not just about enhancing your potential returns, but also about diversifying your risk, optimizing your tax efficiency, and gaining access to professionally managed liquid investments. Consider adding FGD to your portfolio today and start reaping the benefits. Thank you for watching, and remember to like, comment, and subscribe for more insightful investment advice.